Hey there folks, well yesterday we recorded the daily financial news from a giant bathtub. Today we're going to record it from a giant shower. This thing is crazy. If you want to see the entire suite walkthrough, I put it in the playlist, property walkthroughs. This penthouse is gigantic. But let's get into the discussion next week. A lot of it is going to resolve around the Federal Reserve. Yes, it will finally be May 3rd on Wednesday. But first, can you believe that January, February, March, and now April are almost over? Right? April's got a couple of days left. Monday will be May 1st. That is wild. So let's get into the discussion. Let's first actually go through the entire week. We have a lot of economic data coming out. It will start on Monday, May 1st with ISM manufacturing. We need to see if manufacturing is still kind of contracting, and it will be interesting. Tuesday is JOLTS, job openings. What is going on? I believe last month they broke below 10 million. Are we still seeing job openings come in? I think last month was down 600,000. What are we seeing next week? Or what did we see in April? Wednesday will be ADP. Again, folks, ADP report comes out on Wednesday. What is going on with private payrolls? And of course, it will be Fed Day, Fed Decision Day. We will talk about that, and we'll talk about that in more detail in a minute. Thursday is, of course, weekly jobless claims. They have trended over 230,000 the last several weeks. I think last week was 240,000, down 6,000. Where is that going? Is the trend up? Was it a blip? What is going on? And then probably outside of the Fed Q&A, which I think will be the most important part, we will get jobs report for April on Friday. We will get the unemployment rate. We will get job creation. I'm not expecting a negative number, but you know, it wouldn't surprise me if it went that direction. We will see the unemployment rate. Will it go up? I believe last month was 3.6%. So lots of stuff going on there that we should be paying attention to. Bank of America strategist is out saying the yield curve is telling us a recession starts now. They're saying that a recession will be called in Q2. That is Bank of America strategist. And they're looking for the job market to validate that. So lots of stuff going on. Don't know if you know this, but First Republic is being shopped around today. We have JP Morgan and PNC Financial, apparently the last two bidders in. It looks like the FDIC is going to have to take over First Republic. You've heard me on this channel for quite some time talk about it's coming. It will be interesting to see if these banks are made whole. Remember in their Q1 earnings when they said they had $105 billion, they actually had $75 billion in client funds. The other 30 billion was a donation or a deposit from 11 big banks. It will be very interesting to see where that $30 billion goes. Something I didn't know about First Republic, maybe you did, but as of December 31st, 2022, so roughly 4 short months ago, First Republic was the 14th largest lender. Now again, First Republic has done a lot of lending in the ultra wealthy space, giving low interest only mortgages to the wealthy, to their friends, which is now obviously coming back to bite them in the butt. So let's talk about the Fed Wednesday. So this is what my thoughts are, and we will see where they go. So one, we get the quarter point. Last time I checked, I think the odds were up to 86% at the market. You and I have been talking about a quarter point for May 3rd for at least 6 months, so I think we get that. I see no reason to change. I still think we pause after this, but I actually expect Jerome Powell's message and Q&A to be kind of hawkish. The last set of inflation numbers have not been good. They just haven't. You remember CPI core going up, breaking trend? I think they're fearful about CPI, which comes out the next week on the 10th, being hot because again, the base effect was really small, unlike the previous month, which was quite large. So they may have some headwinds there. So again, I expect 25 and I expect a hawkish Jerome Powell. So I expect the market to start talking about and planning for a June hike. I am not there yet, mainly because I believe the economic data that will roll out after the Fed meeting, right? Because again, I've told you I thought this was horrible timing, just how the calendar worked and when SVB went out and now First Republic probably goes out. What is going to go on in the lending market? It's going to dry up. It is going to impact lots of things. So again, very interesting. A couple of other earnings I failed to talk about earlier in the week. Pinterest, a lot like Snap, gave weak guidance. But on Friday we had Chevron and ExxonMobil energy plays, both reported strong, better than expected earnings. Now I want to talk about the multifamily event that I just went to. Jonathan Twombly, thank you. Thank you to all the ORAT family that were there. We took a big group photo, so that was cool. These were kind of my takeaways. I may do a longer form video, but there were 3 takeaways I wanted to give the audience today. 1, we need to, not only is there distressed properties, distressed sellers, but now there's distressed debt structures. What we are going to find is there's a lot of deals, and Jonathan and Anna and I've tried to warn people. The debt structures, this bridge debt, this IO, this debt covenants, all of these things are blowing up right now. And unfortunately, they're blowing up in a time where it's tough to refinance. So you can expect cash in refinances. That is going to be a term. You will have to go out and hit your investors and do a cash in to save the property. That is going to be wild. So again, there are distressed debt structures that will force property sales. Right now, we're in an environment where the sellers want yesterday, the buyers want tomorrow, and there's no transactions. But the debt structures will force transactions. They just will. 2, even if the borrower is current and not in technical default, there are banks that are starving for cash that will force you to sell or refi somewhere else. This is actually something Jonathan and I talked about 6 months ago when I met with one of my bankers. He showed me a folder and said, I can't renew half of these. And they're not even in default. The bank needs cash. So we are going to see borrowers who have great relationships with their banks not get refinances. This is going to be traumatic, and if First Republic goes out, the market's going to slow down even more. And then finally, my biggest lesson is there's a lot of levels to the real estate game. We were in a room full of individuals that were gigantic, at least in my opinion, right? There were people routinely talking about raising 10 million, 50 million. Even heard a couple of people talk about raising $100 million to buy property. This is not where it's not where we play, it's not our thing, but getting in a room full of other folks, hearing their discussion was very interesting. So again, I may do a deeper dive on my takeaways. I have lots of notes. I do want to thank everybody who came out Friday morning to the One Rental at a Time kind of get together. That was a lot of fun seeing you guys there. But again, remember, Federal Reserve on Wednesday. We will get a 1/4 point. I think we will get a hawkish Jerome Powell, meaning hawkish meaning we're not done, inflation's not over, all of those types of things. So again, it should be a very interesting week. I hope you have an amazing day, and this is a gigantic shower, so thought it was fun. Bye.